Welcome to FXcast. This is our FXcast market analysis for Tuesday, May 17, 2011. In each of our videos, we try to come up with high probability trading setups. We look at gold. We come up with a low volatility watch list, an inside bar watch list. We review the economic calendar, and we have an education spotlight at the end. With that said, let's pull up the charts. As we come to our gold chart, the first thing we should see is our beautiful uptrend and what is turning out to be an ascending wedge pattern. You can see our uptrend that we've drawn. You can also say it's supported by the 50 moving average. And we have a little resistance that I've drawn here. If you want to, we could also be a little bit more aggressive and draw this. Let me come down here. And the reason we can draw this is because we made our high, we pulled back, we made a new high, lower than this one, a lower high, and we pulled back again. So there's actually several patterns going on here. We've got our ascending wedge with this resistance, and we have this. So this needs to resolve itself one way or the other. Either we're going to go retest this high, or the uptrend is over, and we're going to get a pullback. So this is what we're really watching, and you can see that we ran right on up. And then when you say, why did it stop here? Well, there's a couple reasons. First, on an hourly, we can see on the prior day that this price level was an area of support. So what was one support is resistance. And we can see over on the daily chart, we can see that it went to the 20 moving average and pulled back. So that's why. Also notice that once it got through here, it went up pretty quickly. We got two big bars, and we pulled back, and now we're seeing the market congest again in all of this volume. So it's going to be interesting to see if gold can move higher or if it's going to move lower. But in the end, it has to resolve itself one way or the other out of this ascending wedge or this triangle that we just drew in. Now when we bring in our complementary charts of the pound dollar, and we can see the weakness already below the 50, whereas gold is not. And what we said here on the pound is we're really saying that you can go ahead and sit on your hands. Is there a possibility of this running down to the 200? Sure. There's even more support right here, and this is what we drew last time. We got this support level, and we've got this resistance level up here. So we have a falling three pattern setting up, but we want to see that resolve itself before we actually get into the trade. When we pull up our hourly, we can see a couple things. There's our market profile. We can see that there's definitely some congestion, and it basically did the same thing as the gold hourly, where it went up to a previous session support and became resistance. Now when we compare that with now the Aussie dollar, we can see two things. First, we had our initial uptrend line. And if you wanted to, we can now draw a secondary one for those who say we've got a bounce. That's okay. We can say there's a new uptrend line. That's fine. But we also, just like with gold, can draw a downtrend line. And which way is it going to resolve itself? Just like gold. Very similar patterns. Very similar. I was going to say the Aussie's a little bit dollar. Aussie dollar is a little bit weaker, but it really isn't. It's still above the 50. The gold is above the 50. When I bring in the hourly for the Aussie dollar, we can see the same move that gold did. Went right on up. Where did it stop? Basically where support was on a previous day. And then we're back in all this congestion. So again, as far as the Aussies going, right now we're saying sit on hands. We do have a falling three pattern. We do have an ascending wedge, ascending triangle pattern that we're watching. But we want to go ahead and let it resolve itself before we actually find a trade. Again, we're talking about high probability trade. There's some risk trades we can take. I mean, there's this M pattern we've been talking about for a couple of days also. But I want to see it break out of this pattern before I'm going to trade it. When we bring up gold up with the euro dollar, we can see the euro dollar is much weaker, already below the 50 moving average. Can it head down to the 200? Possibly, but we drew this line in, and that line basically did hold up as support. So we've got all these lines in the sands that we have drawn in for the euro dollar. Again, weaker than gold. what we see here, though, is that on the hourly, we didn't go up and fall all the way back down. We went up, and then we found a little support halfway down. So that's certainly a little bit better, maybe. And if you zoom in on the hour, on the daily, you can see it went up to the 50 moving average and pull back. But in the end, again, let's let this pattern play out. Watch these key price levels. Certainly there are trades as we cross over them one way or the other. But let's let the trend either define itself as continuing down, and we'll trade this down to the 200, or maybe it wants to get a pullback to the 50. Let's let the market tell us what it wants to do. Our main trade that we're going to look at today is the dollar franc. On a daily chart, we have a sideways to down market. It's obviously a downtrend, but we're going a little sideways now. And the pattern I'm looking at is an inverted head and shoulders. But it also could break to the downside. So that's why we have the head and shoulders long, and we have a short to make a new low. And we have our targets for the long, and we have our stop loss for the long. But we'll talk about the short also as we bring up the charts. Okay, so here we are. We got the dollar franc. And the first thing we're going to look at is that inverted head and shoulder pattern right here. So we got a shoulder, we got a head, and we got another shoulder. So there's our neckline. So a break of that, or simply the 50 moving average, is our move to the upside. Notice we came up, tested the 50, and we failed. Also notice that usually when we come and test the moving average, we make new lows. I talk about that on videos all the time. So are we going to make a new low, or are we going to get this inverted head and shoulder bullish move? So that's why we have two on here. We have the bullish entry, which is above the 50 moving average, and we have the bearish entry. If we get below both of these wicks down here, then we may have to consider the fact that it is going down to at least test the lows, if not make a new low. So that's why we have two entries for this when we want you to be prepared either way. When we look at our hourly profile, we can see that basically it fell right down on light volume. And so in theory, it should come right back up on light volume until we get to just below our entry. But we'll have to wait and see what brings forth the next day. But we want you to be prepared for which way, a break of the trend to the upside or a continuation of the trend down to the low. For our low volatility watch list, we have the euro yen, the pound yen. Dollar franc is setting up. It's not quite there yet. And we have the dollar yen. Now, the pound yen has been sitting this in the tight range for almost a couple of days there. So that's really going to pop once it moves. Our inside bar watch list is the Aussie franc, the Aussie yen, the Canadian yen, and the New Zealand Canadian. Let's take a look at the economic calendar. As we look at our economic calendar, we can see for Tuesday we have some inflation data for the pound, CPI, and CPI core for the pound. We have the businesses giving some of their data about the economy for the German. In the States, we have housing starts. Are we building homes? How many new homes are being built? Red Book has a little bit to do with the inflation data and also affects the interest rate for the dollar. Down at the bottom, again, more inflation data for the New Zealand. So we do have some releases and some that will impact. Most of it is inflation data for various currency pairs. Okay, in our education spotlight, we're talking about the roadblocks that dominate traders' mindset, and basically there are some fears brought together by Dr. Rand Howe. Yesterday, we talked about the fear of uncertainty and the fear of loss, and today we're going to talk about the fear of missing out, which causes you to do some impulse trading, and that impulse can even be on the exits, and the fear of making up for a prior loss, and that's where we do revenge trading. So the fear of missing out is, again, taking impulses. You don't wait for the setup to complete. You let it get 7, 8 steps of the way, but the 9 and the 10 make all the difference. A lot of times you heard the phrase that the close of the candle tells the story, not the wicks. So you got to let the candle close to tell you whether or not what you think is going to happen is going to happen. And, you know, we've all been guilty of revenge trading. You lose in a trade, the market reverses on you, and so you just reverse and go the other direction because you feel like you got to make up that money. And what you do is you take a loss and make it into a big loss because you get two losses. So having control of your emotions and avoiding those impulses, again, is all about having a trader's mindset to be disciplined, focused, and in full control of your emotions so that you can be a profitable trader at the end of the day. Thanks, guys, and I'll see you next time.